If you're a content creator and you've got no idea about tax, then you're probably leaving yourself thousands of pounds out of pocket and completely wrecking your potential earnings. But don't worry, because I'm a qualified accountant who works with content creators just like you, getting results like this. And in this video, I'm going to break down the exact mistakes that you're making that could easily save you £5,000 in tax. But first, as a content creator, you're probably asking yourself the question, am I actually a business? Well, in HMRC's eyes, if you're carrying out activities with the intention of making a profit, then you're a business. Even if you're not making any money just yet, you're still going to be classed as a business. And that means there are rules and, more importantly, opportunities that you need to know about. So if you are earning money from your content, whether that's from ads, affiliates, sponsors, courses or products that you're selling, HMRC wants to know about it. But here's a key point that most people don't realize. You're not employed by YouTube, TikTok or Instagram, and they're not handling your taxes. The platforms that your content are on is more like a marketplace where you've got your own stall. They provide the platform, but when it comes to taxes, you need to sort it all out. And if you don't, the fines and penalties can get nasty, which I'll get onto a bit later. But if you really can't wait to get through this video and want to take the 60-second quiz to find out how much tax you're overpaying, there's a link in the description box where you can check it out. So let me share a statistic that's the biggest mistake that you could possibly make when it comes to your taxes and can save you nearly £2,000 alone. Every year, over 1 million people in the UK miss the deadline to file their self-assessment, and a big chunk of them are creators who didn't even realise they had to file one. So let's say you do have a stall at a marketplace. You're selling your products, but you haven't paid any tax on this money, which means you're responsible for sorting this out. The only way you can do this is by submitting a yearly tax return to HMRC, which is called a self-assessment. I'm going to chuck a few dates at you here, so please stick with me. The tax year runs from the 6th of April to the 5th of April the following year. And you need to register for your self-assessment by the 5th of October following the end of the tax year. And then this tax return needs to be submitted by the 31st of January, which is also when you need to pay what you owe. And this tax return contains details of your business along with your income and expenses, which HMRC will then use to calculate your tax bill. You might be sat there thinking, well, how has that just saved me £2,000? Well, if you don't submit your return on time, then it can cost you nearly £2,000 in fines and penalties. But here's what everyone really wants to know, and it's the number one question I get asked by my clients. How do I get a lower tax bill? So let's walk through some of the deductions that you can use and what most people make the huge mistake of missing when it comes to filing your taxes and slashing your tax bill. Now, if you're like me and you spend most of your time talking to yourself in front of a camera, then you might look at that same camera and think, I could really do with an upgrade, but that's going to cost me a lot of money. But here's what most people don't realize, which is a massive mistake. You're actually looking at it the completely wrong way. That new camera isn't an expense, it's actually a discount in disguise. A new camera is the perfect example of a tax write-off. So when you do buy a new one, you're actually getting it at a discounted price without even realizing it. But actually, it's not just the camera, it's anything that's wholly and exclusively for your business. No matter the type of content that you're making, you're bound to be using cameras, lighting, microphones, editing software, subscriptions, laptops, and hard drives. All of these costs are fully deductible and will slash your tax bill. So let's say you spent £4,000 on your equipment. Claiming this on your tax return can save you up to £1,800 in tax. This is also the same for learning and development costs, which could be if you have a mentor, you sign up for an online program, or pretty much anything that will help you grow and improve your content. If you spend £3,000 on a mentor or courses during the year, then this is another £1,350 saved on tax. If you film or edit your content at home, you're actually sitting on a gold mine that most people completely miss. Think about it. If you're using part of your home for your content, why shouldn't you be able to claim back some of those costs? This is another huge mistake that I see creators missing all of the time, because you can easily save yourself at least £1,000 in tax by claiming a portion of your rent and bills as business expenses. It doesn't stop there though. The type of content that you make can also influence what counts as a business expense. So depending on what you create, you might have even more tax deductions hiding in plain sight. If you make food content, this could be the cost of the groceries. If you make travel content, then the flights and hotels. And if you make gaming content, then it can be the games, consoles, or streaming gear. Your content is your business, which means that almost everything that goes into creating it can be deductible. If you found this helpful so far, then you will definitely love my emails where I give away 30 ways in 30 days for you to slash your own tax bill. You can sign up using the link in the description. Now, you can claim all the tax deductions in the world, but there's one mistake that could turn them all into an expensive nightmare. I had this exact conversation with my clients all the time, and for some reason my clients always wear these glasses. Right. I bought a new laptop and ring light at the start of the year. Can I claim for these? Yeah, of course. Just send me over the receipt and I'll include that on your tax return. Oh, the receipt. Yeah, I don't have it. Got the transaction on my bank statement though. The thing is, you might think this is fine, but this is the exact massive mistake that will take your tax bill from being all the way down here to all the way back up here again. Because HMRC insists that you keep proper records. So if they do come to you asking for receipts, and you don't have proof of the purchase, you'll be hit with a fine, even if it is a legit expense. The easiest way to make your life 1,000 times easier is to keep records of absolutely everything. Things like receipts from purchases, invoices that you're issuing, and just a general record of your income and expenses. And you could do this manually with spreadsheets and documents, but cloud accounting software will make this so much easier. And software like Xero doesn't cost a huge amount and can also be deducted as part of your tax return. So you get even more savings. The scary part about getting this wrong is that HMRC can fine you if your records are dodgy. No joke, they can literally double what you owe them. Keeping things organized isn't really optional. It can seriously protect you from completely wrecking your earnings. Have you ever wondered if equipment that you bought before you started your content can be included on your tax return? Or how about when you get sent free products from brands? Do these have to be included as well? Well, let's clear up these two massive mistakes that creators make, because getting these wrong can land you in some serious trouble with HMRC. When it comes to equipment that you bought before you started making your content, HMRC lets you treat it as an asset introduced into the business. So let's say you bought a laptop last year for £1,000, but you didn't actually start making content until this year. Now you can include this on this year's tax return, which could easily save you £500 in tax. Now how about those free products that brands keep sending you? Just because it's free to you doesn't mean it's tax-free. When it comes to free products that are getting sent to you by brands, HMRC says that anything you receive as part of your business, even if it's not cash, must be included in your tax return if the brand expects something in return. A good example of this is if a brand sends you a pair of £200 headphones in exchange for a review. Now, although you're not getting paid in cash, you do agree to feature the product in your content. And it's for this reason that you need to include £200 as income in your tax return. But if something is genuinely given without any expectations, like no obligations to post, no contract, or no brand agreement, then it's not taxable. Hopefully, as a content creator, you now have a much better understanding of how taxes work for your situation. And I have no doubt that if you implement what's in this video, you could easily save yourself at least £5,000 in tax. But everything I've shared today is just scratching the surface. If you want to dive deeper and discover even more ways to legally reduce your tax bill, then make sure you sign up to my email list using a link in the description for 30 ways in 30 days for you to slash your tax bill. And if you're looking to file your own self-assessment tax return this year, then I've actually made a complete walkthrough tutorial that will make filing your tax return easier than pressing record on your camera. You can watch that video right here.